A warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos. All right, let's begin with your news now. Nigeria has returned to the international debt market with a $2.25 billion Eurobond issue aimed at financing the budget and boosting foreign exchange reserves. The offering comprises 10 and 20-year tranches priced at 9.125% and 9.625% respectively, according to bookrunner Chappell Hill Denham. The sale marks Nigeria's first Eurobond since 2022 as African issuers take advantage of falling global interest rates and strong investor demand. In Congo, the Republic has issued a $670 million Eurobond, its first in nearly 20 years, to refinance domestic debt maturing between November 2025 and February 2026. The bond, which carries a 9.875% coupon and matures in November 2032, marks a key step in the country's debt restructuring efforts. Finance Minister Christian Yoka said the operation illustrates the new Congolese momentum, one of fiscal discipline, exemplary governance, and ambition. In Uganda, the All Africa Pensions Forum opened today, bringing together policymakers, regulators, and pension industry leaders from across the continent. The forum focuses on strengthening Africa's pension systems, improving governance, and expanding coverage to ensure sustainable retirement security.
African governments are the best people to put the money in. Until we had a defaults on Eurobonds, countries like Ghana ended up even clawing back whatever they had from the pension fund, from government paper. If you look at places like Zimbabwe, you look at places Zambia, we realize that the safety we used to think lies in the government paper. We need to rethink it. They're still safe, but maybe we should be not too comfortable that that's where our future lies. So pensions follow a simple model. We collect savings, we make investments responsibly, the assets grow as we get returns. These assets under management and contributions accumulate. Then we invest in catalytic development, and the cycle continues.
In Egypt, Commercial International Bank reported a consolidated net income of 28.8 billion Egyptian pounds for Q3 2025, bringing 9 months net income to 62.1 billion Egyptian pounds, up 47% year on year. The strong results were supported by a 13.1 billion Egyptian pounds release in provisions following a recalibration of its expected credit loss model transferred to a special reserve in line with CBE guidelines. Revenue rose 16% year on year to 83.3 billion Egyptian pounds, driven by core banking growth, while net interest income increased 20% to 78.4 billion Egyptian pounds. Loans expanded 47% year on year to 519 billion Egyptian pounds, and deposits crossed the 1 trillion Egyptian pounds mark, a first for an Egyptian private bank.
Let's switch into the commodities data deck, beginning with energy prices. Brent crude slipped 0.19% to $64.32 a barrel, while WTI dipped 0.26% to $60.40. Natural gas fell 2.07% to $4.25, while Arabian gasoline edged 0.52% lower to $1.91 as of 12:41 GMT. And finally, two metals prices. Gold gained 0.38% to $3,975.30, while copper is 0.47%. Platinum declined 1.40%, and aluminium was down 0.15%. Iron ore fell 1.25% to $104.52 as at Tuesday's close.
Grace, thank you very much for those markets updates. And that's it on today's edition of Money Moves. From me and the rest of the team here at the FMDQ studios, we say thank you very much for watching and bye for now.